Hi, and welcome to the Stockscores Market Minutes for March 9th, 2015. This week I want to talk about playing defense. You will see in a moment that the market is in the early stages of a pullback, and therefore we have to take some different tactics in our approach to the market. Now, if you have stocks that are strong, then as long as they're above their long-term upward trend line, they're okay to hold. I don't think that this pullback is going to be that significant. At least at this point, it doesn't appear so. However, if you have stocks that aren't doing well and are starting to break down through support, don't worry about what they used to be at. It's better to take that first small loss rather than hold on. It's difficult to fight against a negative market. If you're looking for things to buy, it's okay, but be very selective. The market is not going to help the trades that you take. You want to emphasize the stocks that are trading with abnormal volume because those stocks are trading more on their own story than the correlation to the market. And finally, when there is a correction, you can make good profits by trading volatility, either through the VIX, the VXX ETF, or some of its related ETFs. Many of you will know about things like the TVIX, the UVXY. These ETFs will move up very quickly if the market is correcting, and we saw that start on Friday. All right, let's do the analysis for this week. Now, last week I indicated that it was important to have some caution because the market was starting to top out and show signs of a pullback. Well, today we got a nearly 300-point drop in the Dow, and some important support, in the very short-term sense anyway, was broken. You can see that the market built some falling tops. This is an intraday 60-minute chart going back a month. And there you can see a breakdown through support. And my expectation is that this will continue. Maybe on Monday we get a little bit of a bounce. I don't think it's going to happen all at once, but the market really is showing signs that the buyers are tired, and that means prices likely to head lower in the short term. Now, in the big picture, which is this chart here, the S&P 500 going back 3 years, we're still in a strong long-term upward trend. So I don't want anyone to think that this is the beginning of the end. We've had pullbacks many times along the way. They tend to last between, say, 2 and 5 weeks, and we're sort of in the first week of that. And my expectation is we probably fall to somewhere near the green line and bounce. And in the past, all of those pullbacks have been good buying opportunities, and I actually welcome the pullback because it will recharge buyer interest, which was really lacking for most of 2015. Here's a chart of the IWM Russell 2000, which is the smaller cap stocks, and this is a market that really hadn't participated in the strength over the last year, and although it's pulling back as well, it really doesn't have that far to fall before it gets to support. And it's a chart that shows a lot more potential. My sense is that we may see money coming out of some of these large cap names that have done very well and look for places where they can get better return, and that may be in some of these smaller cap stocks. Certainly we have seen in the last couple of weeks an increased number of small cap names doing well. On the Toronto Stock Exchange, we also saw a little bit of a breakdown. Again, this is a 30-day 60-minute chart. You can see the falling top that formed on Thursday, and that we have generally made falling tops over the last 5 or 6 days. And on Thursday we had a pretty decent sell-off on the TSX as well, and that indicates to me that we're in the early stages of that pullback. Now, big picture, the TSX has been basically going sideways for the last 5 or 6 months and probably falls from here another 1 or 2 weeks until it gets to this little upward trend line. It could easily go through that line intra-week and then bounce back before the end of the week. My concern is mostly short-term at this point, but I am a little bit concerned that the market in Canada failed to make a new high. It made instead a falling top relative to the highs at the end of August, and that could be a bit of a negative for the market. Sorry, the beginning of August, the end of July. Here's a chart of the TSX Venture composite, and it has been trying to build optimism over the last 2 or 3 months, but with the strong US dollar and the heavy weighting of commodity stocks in the TSX Venture, until we see a breakthrough resistance, I don't want to get anyone too excited about this attempt at a bottom by the TSX Venture. And after Friday's action, we may actually break this cycle of rising bottoms that has been building over the last 2 months. So I still remain cautious on the TSX Venture market, but really it's the commodity-based stocks on the TSX Venture, which is about 2/3 of the stocks on the TSX Venture. Here's a chart of Treasuries, and on Friday with the strong US dollar, strong employment report, we got a real sharp move down in Treasuries, and we're nearly back to that long-term linear upward trend line. So I think we could fall a little bit more next week and then start the process of generally trending sideways. I think that the strong bull market in US bonds is definitely going to take a long pause. Anytime we see a trend go parabolic and then pull back to the trend line, it doesn't usually go back to new highs. It might bounce a little and just go sideways for a while, but the general outlook is not favorable for US Treasury bonds. US dollar broke a flag pattern last week. We talked about that as an indication that the US dollar was likely to go higher, and that's exactly what it did with a big move on Friday, and that's why our weekly chart here shows a pretty strong move to the upside for this week, and that is hurting a lot of assets priced in US dollars. I think it contributed to the pullback in the US stock market. I think it certainly contributes to the weakness in gold, but as we'll talk about in a moment, it hasn't really affected the oil market the way I would expect. Now here's the gold chart. You can see the break of that green line of support, and that indicates that we're likely to test the lows. It means the sellers are back in control after trying to break that downward trend line in January. It looks like they failed. It looks like much the same start to 2015 as we had in 2014. A little bit of strength at the start of the year, and then the market drifted lower through the rest of the year. Oil market, as I said, didn't really suffer the way we'd expect with the US dollar. There's a very strong correlation historically between the performance of the US dollar and the performance of oil. And with the strength in the US dollar, I would have expected that oil would be testing its lows, but it hasn't done that. Now, what's going on in the oil market? Well, you've got some upheaval in Iraq and Libya, and that threatens supplies. And there's a real big spread between Brent crude and West Texas Intermediate, and I think a lot of traders are trying to make sense of that, trying to make sense of why oil isn't going down with that weakness in the US dollar. So oil is still negative. It's still below its downward trend line. It's fighting hard at that downward trend line, but until it breaks it with a strong move through that first steepest downward trend line, this one right here, I would be remaining cautious with oil, but I am encouraged the way it's held up this week. And finally, fear took a little bit of a bump higher on Friday with the market weakness. I think this could be the place to trade in the near term if we do get that pullback, and certainly it can be a lot of fun trading off of the VXX chart when that volatility increases. So one day does not a trend make, but it is certainly an encouraging sign that fear is going to pick up a little bit, and that is supportive of an increased pullback in the overall market. So long-term, US stocks remain bullish, but short-term bearish. I think a pullback is likely to continue. Canadian stocks are in a more or less a sideways range over the last few months. Lots of volatility in that range, but short-term, the outlook is bearish. Gold, bearish now on both time frames. We've had a breakdown. The downward trend line is held up. Bearish on oil long-term. I'm going to put a neutral rating because it is really trying to break that downward trend line, but it hasn't done so, so it's something that could happen and is certainly worth watching for. US stocks are starting the pullback that we talked about last week, and they're likely to head lower in the short term. The long-term uptrend remains in place, however, so don't think that the sky is falling just yet. Canadian stocks are showing signs of a pullback as well. Gold has broken support, driven by that strong US dollar, but oil is holding up surprisingly well despite the strong US dollar. Well, that has been the Stockscores Market Minutes for March 9th, 2015. Have a great week in the market and trade well.